Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, hope you're having a good weekend. We're going to look at commodities here: dollar, gold, miners, oil, natural gas, starting on the weekly time frames and zooming in. So the dollar right now is in a tightening range where we have our high of this recent bull move, our low of consolidation, which is keeping the weekly higher lows in line, lower high, and now tightening up for a potential higher low. So this is a month-long tightening pattern that's either going to break for continuation or going to see a bear break and start more significant weekly consolidation and lose this weekly uptrend. If you are an oil bull or a gold bull, you want to see a clear bear break. And even natural gas, it would help natural gas, but natural gas has the least amount of inverse correlation to the dollar in my observation. But the bulls in commodities want to see the dollar break these support levels and start more significant consolidation. If we zoom out even more and go to the monthly, we can see that on this entire bull move from $88, which is 10+%, we've only consolidated for 1 month here. So we are due for a bit of a pullback, and we're keeping an eye out for that, for the potential that it indicates that gold and oil can see some upside. So we zoom into the daily time frame. Here's our high, low, lower high, and we're watching for the bulls to form this higher low. At this point, I'm looking down at the most important short-term support level, down here at 96.38, and we are then going to be looking down at 96.04. 96.04 is that weekly support level. So if we break 96.38, it's going to shift the odds significantly that this tightening pattern will break bearish. So those are the two support levels I'm watching into this coming week. As far as resistance goes, it's 97.21. And then the next most important level for me would be 97.54. So bears have the slight upper hand in this pattern. We just need to see a break of those couple support levels to get that follow through for the bears. So gold on the daily time frame, a significant bull break. Let's look at the weekly. So the weekly chart has changed the trend. We had the significant pullback all spring, summer, into the fall. We had the low, high of the bounce, higher low, higher high, and here we are just with continuation. Another higher low and higher high bull move on increasing bull volume. Getting over 1243.35 was very bullish, and it has us looking at 1265.82 as the next major resistance level. Look at these exponential moving averages. The last time we had a bull cross was back here, and that bull cross lasted from March 2017, and this is the 12 and the 26 period exponential moving average, but March, April right here, and it followed through and didn't get the bear cross until May. So a very significant amount of time, and that's March 2017 to May 2018. So we almost bear crossed multiple times, but held on. Then when we got the bear cross, we got significant follow through, and now we're looking for that potential of a bull cross again. And just scrolling back, we can see that when these crosses happen, there are a couple times where it's a little choppy, a little back and forth, but in general, it usually marks the trend for a significant period of time. So that is something that we're going to be keeping an eye on going forward. And at this point, any consolidation on the weekly above 1211 will keep the higher low pattern in place and keep the bulls in full control. So 1265 is the next key resistance level to be watching. We look at the daily time frame and see that follow through. Daily chart certainly overextended, so healthy daily consolidation can be anticipated early this coming week, and we're just going to look for a higher low to form because anything above 1216 is a higher low on the daily chart. So bull miners responding, but just keep in mind this weekly chart has this continuation move. The bull miners are not seeing that yet. GDX, I keep saying this in every video, but I'm going to keep saying it. If you are looking bullish on miners, GDX and NUGT, the ETF, the leveraged ETF, are more bullish than JNUG and GDXJ, the junior miners. If I'm looking bearish in these miners, I'm looking at JDST and the junior miners. If I'm looking bullish in these miners, I'm looking at NUGT and the senior miners. So we have our higher low on the weekly, another one here at 1872, and it's all about 2051. Now, what's the reason that we have not broken bullish while gold has? The reason, in my opinion, is that the market is extremely weak over the last month plus, and we have to remember that these stocks that make up these miners are traded on the exchanges, so they do have correlation. While gold price is the more important factor for these companies, it's definitely the market as an overall factor as well. So it's all about 2051, and if we clear that level, there's no resistance anywhere nearby. 2293 is the next resistance level. Keep an eye on these bull miners, especially if SPY breaks the low of October in the 259s and rolls over. So key resistance test approaching. Daily chart a bit extended as well. We do have a support level at 1950. Anything above 1950 keeps the strong daily momentum intact. Highest bull volume on the daily chart that we've seen in about a month was this Friday. So bulls certainly showing up, but we do have one more resistance level to break. And again, let's just compare it. So we got the gold weekly chart with continuation, GDX close to continuation, but not there yet. Look at GDXJ and the junior miners, not even anywhere close, 30, 31. And here we are still 6% below that level. So that is very notable. A weekly higher low is down at 2632. We can anticipate that we're just going to set a lower high and not going to break this resistance level anytime soon. And we are going to be watching 3031 as the key level. The daily chart didn't even really get much follow through, and 2824 is a double top. That's the high of November 21st. To compare GDX to where we are on the 21st, look at how much higher we are. We closed significantly higher, about a solid 2.5% above that support level, 1.5%. Either way, that's significant, where it's a double top on GDXJ. So just sign after sign that the senior miners are stronger. Oil on the daily time frame, or this is the weekly, we have to be very cautious of a bear flag. It is absolutely possible that we see this weak bounce attempt and then follow through with another leg down. So we always have to prepare for every scenario. And as of right now, this is a potential bear flag, which I'm doing a terrible job drawing, but you get the idea. A potential bear flag on this weekly time frame. So if we lose support levels on the daily time frame, the odds that this is a weekly bear flag will increase significantly. We were looking for visually just a 15% bounce off of the low, and at this point we got about a 10% bounce, but there are some short-term red flags that we have to be cautious of, and we have to prepare that perhaps our 15% target was a little bit too lofty. It's all about the daily chart and a tightening 4-hour range. So let's look at it. On the 4-hour, the most important levels for me and what stands out are the high of our bull move at 54.54, our low of consolidation at 50.06, our lower high now, we couldn't break these resistances at 54.20, and now we're looking for a higher low in the $51 range, and for this pattern to continue to tighten. So looking at it on the daily time frame, we have the low, the high of the bounce at 54.54, our higher low at 50.12, and an inability to break resistance. You can see the upper wicks on this daily chart, pretty much around the $54 range. We've got 3 out of the last 4 days with upper wicks showing profit taking and rejection from these resistance levels, and it's also rejecting from these exponential moving averages. Again, we just looked at these for the gold chart longer term, but look at the daily chart here for oil. We have seen follow through when we get the bull cross. The bull cross occurred here, and we saw an extra significant move up, about 8%. After that, the bear cross certainly has a huge amount of follow through. So until we get that bull cross, we're not going to be entirely confident in the shift in momentum. And here we are rejecting at this exponential resistance. So possibility for another leg down. I personally would not be looking to play bearish on another leg down as things are too extended. Well, I take that back because we have cooled off RSI on the weekly time frame. So if we do lose that daily support, there could be a short-term bear trade there, and I would consider that. Again, just keeping short-term in mind because of how extended we are. But if the bulls cannot break 54.54, that's it. They don't prove anything, and we don't get any follow-through. So it's all about that resistance level and a tightening range as we head into this coming week. We've had some OPEC news that has certainly been a factor, but overall just sticking to the price levels, and that keeps us, in terms of clarity, that keeps things a bit more simple, at least for me personally. Natural gas on the weekly time frame, not a whole lot of info. We can see we're tightening up. I want the daily details so we can see the equilibrium continuing to play out with our high, low of the pullback, lower high, higher low, lower high, higher low. In a recent video, I talked about how I will consider this a double bottom. We did break support by 1.2 pennies, but the response to that break tells me essentially we held that support. So I'm making a little bit of a personal call to say that that support is still holding. Most important resistance short term for me is 463. A break of 463 is bullish. If we reject and form a lower high compared to that level, we're going to stay in this tightening range, which we've been in the last 5 days. We're going to stay potentially into the middle of the week. So first thing Sunday night and Monday, can we break 463 for a bull break to be looking up at recent highs? And if not, a tightening range is the most likely scenario to continue. And we're going to be watching for this tight range to dictate momentum into the end of the year. And it's going to be a nice signal, in my opinion. So we're going to continue to watch that. But as of right now, 423, most important support, and 463, most important resistance. Still a lot of space in between those two levels. That's where we stand on commodities as we head into this coming week, keeping an eye on those bull miners and gold for the potential continuation if we do see SPY break down and some of that fear creep back into the market and some of that money move to physical precious metals. Have a good weekend.